Hey there, this is Alex Kluge. I'm here from Toronto Home Experts. I'm here to dive into the October 2021 Toronto real estate market update. So before I jump in, I want to just explain that we're going to be comparing against October 2020 numbers against October 2021 numbers. So, it might not come to surprise anyone watching this video, but last fall was certainly not a normal real estate market. So when we're comparing, October 2020 numbers against 2021 numbers, they're going to be a little bit skewed. And so, not to worry, I'll explain what each of these means, why they are where they are, and what this means for you as a buyer or seller in this market. Okay, so sales volume is always one of the first metrics we look at. And when we look at what happened last October versus this October, we're actually down 6.9%. So you'll be happy to note that this is actually the second best October we've ever had on record this year, 2021. Compared against the 2020, that was the number one October in terms of sales volume we've ever had. So, what does this mean? Well, really what I think is more important is not where we are from last year, but where we are year to date. Year to date, we're actually at just over 106,000 sales for the GTA. And actually, the highest on record is just over 113,000. So the fact of the matter is, we're going to blow that out of the water this year. So this is going to be the best year on record for sales volume we've ever had. So just goes to show what kind of healthy real estate market we have right now, and that sales is, surprisingly extremely strong. Even this late in the year, which is great news. So, but what's actually I'm going to get into active listings, but what's actually interesting is that, there's a couple of factors I think they're at play. Certainly, what I've been seeing over the last month being feet to the ground. So, a lot fixed rates are increasing. So mortgage rates are increasing, bond yields are rising, and so that's putting a lot of buyers who have mortgage pre-approvals or rate guarantees in place, to buy. So if usually there's typically like a 90 to 120 day rate guarantee when it comes to mortgage pre-approvals. So we're seeing a lot of buyers wanting to lock into those rates because they are going up, and certainly there's going to be continued pressure for fixed rates to increase later this year and early next year. Same with variable rates. Variable rates will increase. Certainly there are predictions that'll probably happen sometime in Q1 of 2022. But the fact that we're seeing fixed rates rise is putting what I think a lot of buyers wanting to lock in on these. As I said, like previous videos, like ultra low, historical low rates. So comparing active listings, take this with a little bit of a grain of salt. Last year we certainly saw a spike because of the unusual year that we had. So this is not a great metric to look at, but what this does highlight to me is that there's really a shortage of inventory. There's not enough inventory to satisfy demand right now for buyers. And the fact that we're only at 7,700, is telling me that really we could use a lot more inventory to satisfy the demand of buyers, and you'll see why in some of the subsequent slides. New listings, no surprise, are also down. So again, this comes to the fact that we're comparing against last October when, really what I would say is was a very active fall market, unusually active fall market due to the COVID pandemic. But this year the fact is, we're just seeing so much pressure for purchases in this marketplace. Because of lifestyle change. So there might be people looking to adjust their lifestyle because they're working from home permanently. A lot of businesses have announced over the last a month or two that they're working from a permanent work from home. So a lot of buyers have said, okay, well, if I don't need to go in the office every single day, or maybe I need to go in the office once or twice a week, that's really altered the mindset of buyers and where they need to be and where they want to live. So that's one thing. So the other thing I want to talk about is, when we're seeing such a low inventory across really almost all asset classes, whether that's condos, townhouses, or freehold semi-detached or detached properties, that's going to put upward pressure on price. And so, unsurprisingly, we've seen average prices increase by 19%. So does that mean that your house or condo has gone up by 19%? No, it hasn't. But what it's really showing me is that, we're taking like an average price. So average price of properties. So it's an average basket of whatever sold last October with, the basket of all the properties that sold this October, and what comes up is the average price. So, really what you want to look in, and to really give it an accurate reflection of what's happening in the market, you want to look at one of my favorite metric, which is called the HPI, which is the House Price Index. So why don't we dive in and take a look at that? So the House Price Index is really a metric that was devised by, the Toronto Real Estate Board, and takes into account. So it's not like an average sale where you've got one basket and one basket. Like, it really is um, uh, a great metric or tool to look at, to give you like a more of a holistic perspective in terms of what's happening price wise in the market. So again, take these with a little bit of a grain of salt, but I find this gives a more accurate picture of what's actually happening. So you'll look at this slide here, and it shows that really we've got the 905 region really driving the prices, and especially with a region like Durham or Halton, it's been unbelievably healthy price appreciation year over year. So is that sustainable? Absolutely not. And I think this is kind of maybe a one-off, in the sense that we're going to see more muted appreciation rates over the next year or so. But really, it's been the 905 that's been driving that appreciation. But here's where I find it the most fascinating, is when we're looking at asset classes. So, how has each class performed in light of the pandemic year over year? So, if you look at these slides here on the right hand side, you'll see that really it's the detached market and semi detached markets that are really seeing the greatest growth. And that actually makes a lot of sense. And a lot of the anecdotal evidence that we were providing in previous videos in terms of why that is, like condos really saw a dip, I would say, certainly into the first part of the pandemic, but that hasn't been the case over the last call it 10 months or so, as evidenced by these slides. But you're looking at regions like Durham, which traditionally have been more affordable regions for Toronto real estate. So that's really kind of leading sales, and it's been red hot. So, when you look at Toronto prices increasing by 18%, it's truly remarkable for a detached to go up when they're already priced higher than relative to some of these other regions, whether that's Peel or Durham or Halton and so forth. So it's fascinating to see that. So where do I see things going next year? Well, the one thing that really hasn't been a factor with real estate this year has been immigration, which is typically one of the main drivers of real estate growth for Toronto real estate. Obviously the pandemic put a brake on things when it comes to allowing new immigrants to Canada. But what I see happening is probably start of early next year. Certainly, the Trudeau government has announced that they would like to increase substantially the amount of new immigrants coming to Canada. So typically, we'll probably see the bulk coming to some of the major urban centers like Toronto will be a beneficiary of that. So I think next year will be really fascinating to see. Yes, we might see slow appreciation of mortgage rates, so that might dampen things a little bit. But the fact is, we're going to see a lot of net migration coming to Toronto. Will be good for our market, certainly in 2022. So sales to new listings ratio. I know last time, certainly the last few months, I've been talking about it, but really wanted to kind of highlight in terms of where we are sales wise to new listings. Like, these are pretty startling stats. So what this means is, what percentage of new listings are actually selling, and we're looking at like Halton and Durham region, like almost at 80%. it is truly remarkable. Like, I would say a good market typically, might be somewhere in the 55-ish%, maybe 60%. But the fact is that we're, well into the 70s in many of these regions outside of the 416 is truly startling. So, anyway, so what does that mean? Well, obviously, when you have a lot of the inventory selling, there's not enough inventory, there's upward price of movement. We see stuff like months of inventory decrease, which is exactly what's been happening. So, days on market, unsurprisingly, is down from where we were last year. 13 days as an average days on market for all of GTA is unbelievable. Well, actually, it is the lowest we've ever had on record for an October in the history of Toronto real estate recording the stats. So again, this kind of goes in line with some of the themes that we've been talking about several months. And I expect that to continue moving forward, certainly into the start of the new year. So, the main theme is that there's a lack of inventory, and that's going to be the case, driving the market over the next, certainly into the end of the year. So months of inventory, as I just said, because of all the other facts that we talk about, will put downward pressure on months of inventory, and we are down officially at 1 month of inventory, which again for October is an all-time low. So, this just goes to show that we are very much tilted in a seller's market, and it's tough being a buyer, certainly in some of the 905 regions that we've talked about, previously here. But we're seeing the downtown condo market is back, and the rental market's back. So that's good news for for anyone who's looking for sort of an indicator in terms of what's happening with the downtown market overall. So anyway, so that wraps up our video for this month. We'd love getting your questions. Hit us up on social media. You can always call, email, text. We love hearing from our viewers and answering any questions you might have, how it affects you as whether you're a buyer or a seller in this market, and taking advantage of some of the strategies that we're talking about today. Anyways, have a great time, and we'll talk to you soon. Bye for now.